Good morning, everybody. Hope your evening went well. It was a nice one in Wichita, albeit pretty hot. There is some moisture moving into the area from Pacific hurricanes and from the Gulf. So if we ever get this cool air that they're talking about that has been over the Rockies to spill out of the plains, we got a shot at some moisture, and we need it. The row crops in Kansas are suffering right now, and while we're not the market makers for soybean and corn, we do feed a lot of cattle in this part of the world, and corn and soybean production is helpful. The soybeans go to the chicken and the hog farms north and east of us. The corn goes to the feedlots. Cattle don't eat soybeans for the most part. They don't need the protein. They already have that. They need fat to marble that meat and give it its flavor. So there's no news overnight. A lot of the articles that I put up this morning are just kind of long-term takes on what's going on, comments on the state of things. So we had hoped to buy the financials cheap last night. We weren't able to do so again. We have to pay up to get in, just like early in the session we have to pay up to get in, to get off along in the E-mini. It's the state of things. And the dynamic that is running the financials today will be the 5-year auction. And the pattern that we see repeatedly, in fact almost every time, is the price for each auction is higher. So I think that'll be again the case today. Yesterday's auction got off at 126.01. So we would anticipate an auction today, maybe in the 3 area, 3 or 4. Okay, they can't take a market straight up during auctions. They have to work it back and forth. And so we've got resistance at 8 to 12, then basically at 19. So failure to get through this 8 to 12 area sets up a short. So we put a sell 1, 7 to 11, and then sell 2, 15 to 19. On the buy side, we're going to get started at 29 to 01, but we may have to move this up. It may take a 2 or 3 to get off along, so we'll see where that first rotate stops. So the first trade out of the box is going to be the failure to extend the range, take out this 9.5 level to the 7.5 level. This is resistance. And if we fail, we can get short in anticipation of at least getting back down to the London low, which is at 02. The second buy is way below the market at 21 to 25. I don't see any way to get there, even with the E-mini exploding and moving up with some momentum, which I don't see happening today. It just don't think it's in the cards. I don't think they're going to sell E-mini because of a close, an anticipated close at north of 2,000 by the end of the week. I think that suits everybody's needs. I mean, if you're compensated on a higher stock market and a higher bond market, don't think anybody's going to get out there and bang on the market. So 02, 03 might be as good as we can do on the buy side. I hope to buy cheaper. That may not be possible. So we'll have to let that unfold. Okay, taking a look at the 30-year, which is where we really recommend that you learn to trade our methodology on the 10-year because the cost of tuition is as low as you can make it, maybe even 5-year. Your interest is to learn the methodology, not to make money. Say, au contraire, Charlie, how can... I mean, I want to make money and learn too. Well, you can do that if you follow our advice. But the process, I mean, you're being introduced to probably a radically different way of looking at the market than you either trade. Most people either get into trading off of fundamentals or they get into it off of technical analysis. And technical analysis focuses on price. We focus on volume and structure. And we align ourselves with the long-term money. We execute with the professional trading community. And it's our most important decision is the market's direction, followed by entry points at price levels that offer us an advantage based on one trigger, the drying up of the buying or selling at our entry levels. So it takes a while to get this down and to accept it. It's ironic. You come into trading accepting the efficacy of two lines crossing on technical analysis studies, and those studies, there just really isn't a technical analysis study out there that's right over a third of the time. Plus you're late. You're at least 2 bars late when you do that. And then you come in and you question the hell out of the dynamic that actually drives the market, more buying or more selling. So you got to get comfortable with it. It is a different way of thinking, but it is how you're going to make money if you stay with us and adopt the way we approach the markets. Okay, right now I see a trading range on the 30-year, just with an upward bias. The knob spread did come in. It was high as 24 yesterday. It's in the 16, 14, 16 area right now. It is holding. So we've got buyers 12 to 16, and we have a seller, looks like at 30 to the buck, and we're at 27. So we're going to sell failure to not get through 141 and 3 to 7. I don't see any dynamic that can really take us up today and break us out to the upside, especially with a 7-year coming tomorrow. On the buy side, 13 to 17, and it may take a 21 to get in. It just depends on what happens early. The tendency has been for this market to rally first, find resistance, and then work its way lower. So we may have to pay up to get in early. And then if resistance holds, I got no problem, or as my wife would make me say, I have no problem being short with failure to take out 121. If you're married to an English teacher and an adverb comp, which are usually one and the same, it does change the way you speak. Made for 3 pretty good girls and pretty smart gals in school. None of them had any trouble making the grades because of my wife's tutelage. Okay, gold held in pretty good overnight. Didn't see any real changes there. We did just touch the top of our buy zone from yesterday. So we like the 80 area, leaving the market last night. And on the cheap side, we had, let me get the right piece of paper. We had 83.85, then 79.81, so we got down to our number 2 buy zone last night. We do like our number 2. Actually, I don't see how I wrote that. That can't be correct. We had an 80.82. That's where we were, so our number 1 held. That looks pretty good today. Hopefully those of you that are up London time profited from that. 75, 77 will be buy 2. We had a 88 to 90 sell. That looks reasonable. We caught both ends of the market. We'll keep it that way. And then we'll make 92, 95 for sell 2. I see us in a trading range. I don't see anything right here that'll break us out. The biggest danger is central bank intervention. And they can knock the daylights out of the market and take a slower quickly. Okay, if the market is stronger than I think it is, we'll get down here and at 84, 85 we'll hold the support and it'll start up from there. So we're going to try to buy it on the cheap as usual, but we may have to pay up. Okay, the euro overnight. We had good calls, I think, for London also. Let's see, we had a 50 to 60 buy in the euro last night when we started out. That turned out to be the call. It happened in Globex. So we're at 82 right now. Last rotate down stopped at 63. So we'll make 55, 65 buy one. Our sell in the euro was 80 to 90. We're in that band right now, so let's make it 90 to the buck for sell one. So we caught both ends of this market. And again, for those of you that can trade London time, you probably are conversant in currencies. And London has a contract called Brent that helps crude oil to trade, and obviously currencies and gold. And we'll make 10 to 20 sell 2, pick up the top of that. And if we break the 50 area, I think we're headed lower, so we'll make it 25, 35 for buy 2. But London really offers some just a really good opportunities in currencies, gold, and crude too, because of the Brent contract. And WTI trades well overnight. The NYMEX contract does, which we focus on. Okay, I put an article up on crude oil. Well, of course, Fitzroy. Wouldn't have it any other way. We love our European clientele. They've been loyal customers over the years. Okay, looking at crude, if I can find it there it is. I put an article up earlier on why the selling in crude oil, and they say it's massive liquidation of long positions that have been built. Could be anticipation of war in the Middle East, anticipation of war between Russia. I mean, I don't know, but that was one person's take, and it's worth a read. I do know this: as Libyan crude comes back onto the market, as Iraqi crude is protected and not in jeopardy, with the increased production in crude oil coming out of Canada, the United States, and Mexico now long term because they're privatizing Pemex. The North America will be increasing the supply of crude on the market too. The United States is now allowed to export crude. And so we have an increased supply situation, and with the downsizing of the automobile fleet in the United States, the demand for crude oil to convert to gasoline is lower than it has been historically. So we're in the same situation in crude that we have been. A headline can explosively move this to the upside. The selling comes, but it doesn't. It's not explosive selling where the bottom falls out of the market usually. It's a slow, steady grind down. So we are at resistance. Resistance is 94.50, so we're just going to do what we've been doing. This is resistance. We're going to sell it, prove me wrong. And then 94.75 to 95 for sell 2. On the buy side, we're at 94.20. I'm going to give it a little room. on the idea that we might hold in this 94.50 area. So we'll put buy 1, 93.50 to 75, and then 93 and a quarter for buy 2. Okay, they're looking for plus 1.1 million barrels for the EIA report. It will impact the market, but in crude oil, quite often the news hits and it's bullish or bearish. You get that initial reaction and the market reverses and fades the news. So we'll have to watch for that too. So the sell, the first sell, I mean, that's just resistance. There's no magic with that at all. And on the buy side, we're going to give it a little room to the downside on the assumption that 94.50 will hold. Okay, the E-mini and most stock markets around the globe were just dead last night. There wasn't any activity. The big articles out on the EU economy were longer term in nature, talking about slow growth, deflation, and Draghi will have to add to his easing program, whether he likes it or not, but no specific news. German investor confidence was a little bit below forecast, but not much. The news out of China was pretty limited. It was talking about commodity deflation, and you have to, China at one point was like 50% of every commodity market. They were buying and stockpiling to make sure they had inventory at a price that made their manufacturing profitable. Well, slow growth has returned to is the fact of life most of the world, and China's finding out that they don't need those stockpiles. And they're financing based on commodity prices, and people are getting squeezed. You know, I buy something at $100 a ton, and it's now at 70. I got to make margin calls, or my lender will call or pull the loan, and that's happened in China. Okay, so structurally right here, we've got an inside day on the F1. You can see right here this 93 area is the low volume number. It's also a breakout point. So this 90 to 93 area is probably pretty important support. Right now, 2003 is resistance. So that's a 10-point trading range. So ideally, we'd like to buy the 90 to 93 area based on this long-term structure with prices pointed higher, but that means we got to get through 95 first. I don't know if we can do it. Yesterday, 97 was pretty good support. Well, that's certainly true, Jeff. It's be interesting where 2 or 3 families had to put together all of their savings to buy spec real estate in China, what that would do if those markets collapse. There probably isn't a hell of a lot that, if they are going to collapse, and I'm not saying they are. If you followed fundamentals, you'd say they would, but if they are going to collapse, I don't know what the Chinese government could do to prop them up. After a little bit, early on they could, but not over the long term. I guess they would prop them up with rifles, being a dictatorship who aren't afraid to shoot their own people. That's how they would keep things reasonably calm and working. Okay, I think this volume back here in this area, this 85 to 88 area is really, really key. Yesterday, we really could not break 97. We're at 99 right now. The overnight session low is 98. So volume is moving higher in these distributions. I don't think we can break it out today. Selling failure to take out this 2003 area, I think, is the easiest trade to see. Maybe go a little bit above that and fail. So we'll make 2003, 2005 the sell failure zone, and then we'll make 8 to 10 for sell 2. Pretty hard to see us getting there. I can see us getting down to 93. I mean, that's 10 points from the high of 2002.75. So this 93 area, I think, is probably really represents pretty good place to get long. So we're going to start out making 93, 95 by 1. And then we'll make 90 plus or minus by 2. This number, this 93, 95, might have to come up to 95 to 97. Don't know. And we've got volume right here, a little bit of volume that might take us up. So it's not much to work with today in the way of news. The bad news was ignored yesterday. Bull markets, bad news is ignored. It's a fact of life, and that keeps the fundamentalists on the sidelines and not participating. Okay, it'll take about 15 minutes to get everything up and posted. I'm going to get busy on that right now, get it done as soon as possible, and we'll see you after that. No news on tap.